If we were to tally up all of my losing investments into the stock market, the current total comes to £6,000. Fortunately, I've also had my fair share of good investments that have kept my portfolio in the green. However, in hindsight, I realised that I could have likely avoided all of these losses if I had known what I was doing. Which is why I'm creating this video today, because if an average person like me can make these mistakes, then so can you. Let's dive in. Alright, so before I start, I think it's probably a good idea just to break down where I'm at currently so that you guys can have some context. As of right now, we're looking at roughly a £6,000 loss in my portfolio, with a split of £2,000 in realised losses and around £4,000 in unrealised losses. Now, just to clarify, realised losses refer to stocks that I've already sold, resulting in an actual loss, and on the other hand, unrealised losses indicate that I still hold the stocks, however their value is simply decreased by £4,000 since my first investment. Now, I know I'm going to get some people saying it's simple, you just hold some of those stocks until they recover. I really wish it was as easy as this, but essentially where I stand right now is that if I was to sell all of the losing investments that I have, they would net me a £6,000 loss. So now that we know this, let's now tackle the question of how could I have avoided this in the first place, and what are the lessons that I've learned along the way, because it's so surprising how quickly just a couple of bad investments can really decimate a really good looking portfolio in no time at all. Let's start off with the first mistake, and that is falling in love with a company emotionally, not from an investment point of view. Now, I think this is probably the one that hit hardest for me so far, and I want to use my current investment into Disney as an example. As of right now, I still hold all of the stock that I originally had in Disney, but I'm currently sitting at around a £1,800 loss, and I would put a lot of this down to me investing with pure emotion and not approaching things as an actual investor. You see, my decision to invest into Disney was mainly fueled by my affection for their products, memories of visiting the theme parks when I was a kid, and of course we have the nostalgia of the old school films and my love for Star Wars. And like most people will say, whilst these factors really do provide a good solid starting point for analysing any company, my evaluation didn't really extend much further than that. Some of the things that I failed to consider was that the stock was actually really overvalued at the time, park attendance was actually dwindling, and the stock price was heavily influenced on streaming service numbers and a fierce competition with Netflix. This has led to right now where the stock price currently sits at around half the amount I originally bought in for, and things are actually starting to look a bit more positive, so I will continue to hold and maybe even buy some more shares soon. But looking back retrospectively, if I were to actually approach this from a more analytical point of view rather than with just my heart, I probably would have been able to have minimised these losses. I'm not saying I would have avoided the loss as a whole, but my strategy would have been much different. Number two is taking investment advice from somebody else. Now, this one is so common and very scary as well, because I see this happening every single day, especially on places like YouTube and other platforms, and I'll start this lesson with this one statement. Never, ever, and I mean ever, invest a considerable amount of money into anything based on a recommendation from a financial influencer. It doesn't matter who they are, how many followers they have, or how much they have claimed to make in the stock market. It doesn't matter if it's me, Graham Stephan, or your next door neighbour. An investment decision should be purely based on your own research, and I'm going to give you the prime example of why this is so true based on my own mistakes. So the investment example that I'm going to use for this one is a stock that I've recently sold, and that's my investment into Tattoo Chef, where I cashed out at a painful loss of £2,000. Now, for those that do watch a lot of finance YouTube content, you probably already know where this one is going, but for those that don't, I invested into this company purely based on the fact that another YouTuber by the name of Financial Education, or Jeremy, would constantly make positive videos about this stock, and there's no other explanation other than the fact that I just bought into the hype. I even made some YouTube videos on this stock myself where I claimed I'd done a bit of research, which I did, but I would have to say that 90% of my decision to invest in the first place was the fact that I was influenced from a biased opinion. Now, once again, if you are new to the finance space on YouTube, you would come across Jeremy and see that he has over 700,000 subscribers, thousands of views on every single video, and if you've watched his other content, he's done pretty good in the stock market himself. But I have to say, where I have made the mistake and and where likely hundreds of thousands of others will do with this channel as well, is falling into the hype trap that he creates in his video, and it's turned out quite costly for me, and it's going to be much worse for others as well. And whilst this is really scary and I really do hope people come to their senses faster than what I have, the thing is, none of this is actually his fault. Because here's the thing, you see, whilst Jeremy, in my opinion, doesn't give enough clarity and disclaimers than I would like to see from a financial influencer, at the end of the day, he's never stood there and forced me or others to actually buy anything or make any money-based decisions. I simply made that decision by myself, and I went against my #1 rule of investing, and that is not to be swayed by anyone else rather than my own decisions. You see, what Jeremy was doing was just simply what any other stock picker YouTuber would do, and that's talk about the stocks they buy, and normally that's going to be in a positive sense. He's not telling us at any point how much or when to invest into it, he's just giving his own most likely biased opinion on what he's doing. Now unfortunately, Tattoo Chef has now actually filed for bankruptcy, and looking at the viewing figures on his videos on this stock, there's probably a lot of people that are a lot worse off in this type of investment than I am. But this is a rule that I've always spoken about and one that I didn't follow myself, but I'm glad this happened and I'll never make that mistake again. Number 3 is investing without confidence. So the investment that I'm going to use to explain this lesson is going to be my one into DraftKings. Now for those familiar with this company, you will know that they are actually currently having one of the best ever years a company can have in the stock market, with the stock being up around 165% year to date. However, unfortunately my investment with them still sits in the red at around a £400 loss, but this wouldn't have been the case given I had the confidence in my own decisions. You see, unlike the Tattoo Chef and Disney investments I made, I actually did a full analysis of this company from a non-emotional standpoint, and I made the decision to buy this stock purely based on my own research, and I still fully believe that I will make some good profits over time. However, the problem here is that I had zero conviction and confidence with my decision. This is because going back, when I first invested into this stock, it was actually floating around the $600 a share mark. However, due to the general overall state of the stock market, the stock started to drop just like every other growth-based stock out there. Originally, it started off by dropping to $50, no problem, I just carried on investing. It then dropped to $40, once again, no problem, I carried on investing. But when it dropped to $30, this is where I started questioning my own decisions and ended up pausing all future investments into this company, despite from a business standpoint, the business only continued to grow. Eventually, the stock actually bottomed out at around $11 a share, and whilst my decision on why I invested into this business has stayed the same all along, if I would have continued to stay confident with that decision and continued dollar cost averaging into that stock and bought the average price of that stock down to the point where it was much lower than the stock price today, I would be sat here right now with some nice healthy profits and most likely bragging about it a little bit as well. Unfortunately, I didn't do this and it just simply wasn't the case, and learning from this, I would actually probably say to myself in the future is that if I'm not confident of buying more of a share in the future, then that's probably a case that I should actually think about selling it. I have to say though, if I was to take a positive from this lesson, it's proved that my patience is not to be messed with, because there's many out there that would have likely have panic sold this stock. I just lacked the conviction to really take advantage of the low prices the stock presented to me. Now just to say, I really think if there was just one thing that I wanted you guys to take away from this video, and that is whatever you invest into, you really do need to do it with conviction. This means that if the stock price does continue to drop, you shouldn't panic because you're making your decision based on the company's performance, not its price in the stock market. Stock prices aren't just only moved by an individual stock's performance, an entire economy can move a stock's price as well. Just look at COVID, pretty much every single stock dropped at least 10% overnight. But realistically, Apple didn't drop from $174 to $137 just because people stopped buying iPhones. Their business model didn't change it, it was the environment around it, and since then they've been able to thrive and get back to all-time highs. But anyways, I hope you've been able to enjoy this video and you've learned some valuable lessons based off my own pain. Please do try to avoid these mistakes like the plague and don't do the things that I have done. Also, make sure you follow me on all my social media accounts where I post daily content, and don't forget to sign up to Trading 212 and get your free share worth up to £100 if you haven't already. I will see you guys in the next video. Take care and I'll see you soon.